All right. Well, I am here with none other than Ryan Levesque. I'm so excited to have you join us. For those of you that don't know Ryan, who he is, what he's about, Ryan is an Inc. 500 CEO, founder of the Ask Method and Bucket.io. He's a two-time national best-selling author for the books Ask and Choose, and really is an authority in the world of online marketing and digital products. And so, Ryan, I'm just excited to have you here. Thanks for joining.
Justin, it's awesome to be here, man. It's an exciting time for you, and it's really an honor to be able to play a small part in it.
Well, I appreciate it. And you're so humble saying you've played a small part. You've actually played a very big part. And in fact, just a moment before this, we were, recording an episode with you and on your show for your community based on some of the work that you did with me and some of the new products that I have available. And so I think the world of you and your strategies, your framework, it just is so good. So I just want to thank you.
Well, no, I appreciate that. It's fun to work together because, obviously you're a master of your domain and just such a subject matter expert. And I think in a very unique kind of area of the investing world. And I think you bring something to the table that's very different from certainly anything else that I've been a student of in the past in terms of what you teach and kind of your ethos and your approach and your philosophy. I've learned a ton from you personally. So, whatever contribution I've been able to make to the process of kind of getting this rocket ship off the ground, I've gotten a tenfold return just on what I've learned, kind of being around you and being part of the process. So feeling is mutual, my friend.
Well, I appreciate it. And it's so fitting that as I'm kicking off this live stream series for the book launch, for the Lifestyle Investor book launch next week, Tuesday. So it's literally 1 week from today. Which is crazy to think about that's already here. It has been a long time coming, and there have been COVID delays, there have been just all kinds of stuff. So for it to be 1 week away, it's just really kind of surreal. And I love having you on as my second guest for this series, especially because you were one of the original gangsters, the OGs from the original investment club. And we've done a lot of private coaching together. And so I just love that you are, here supporting me in this big moment.
It's great. I mean, like I told the story, I don't know how, where you want to take the conversation, but, I told the story in the forward to the book, which is, it's an amazing book. I think it's such a distillation of your, kind of decades of wisdom on this topic, all just crammed into this book. It's like one of these books that's really dense. You've got to read it a few times to get all the value from it. It's not one of these books that's filled with a bunch of fluff and space wasting filler. There's so much goodness in it. And I shared this in the forward to the book that, kind of all started not that long ago, where you and I sat down, we had a conversation. It was a conversation that truly changed my life, what I've learned from you. And at that time, you didn't have a book. Like you said, learned what I learned from you, working with you privately, conversations that we've had, the investor club that you started, absorbing through osmosis as much as I possibly could. But now the fact that you've put all that wisdom and knowledge in the form of a book, you can reach so many more people, and people who simply just would not be in a position to be able to learn from you privately. I mean, I think that is, it's huge. I think it's going to make a massive impact. And I predict that this is going to make waves, that this book is going to make waves. People are going to notice. And I think this moment in time right now is one that we're going to look back on and think back to ourselves. Remember before the book, what life was like? And then what life is like after the book and how it's like completely changed. So I have some bold predictions for what's coming next for Justin Donald in this book.
Well, I appreciate the kind words and the support, and it means a lot, especially coming from a two-time national best-selling author. So, I feel like, you're a good person to follow because you have a message that has also gone viral and has gone out to the world. I was at one of your events as an attendee, as a guest of the event, and there were people from all over the world that showed up for this 3-day event. And I was just blown away. I mean, it was incredibly professional, very well done. And I just walked away so much wiser and smarter in, the world of marketing and online products and, just strategies and creating things that people need. So I thank you.
I think what you and I teach, I think is very complementary in a lot of ways and we've got some mutual friends and mutual clients who are students of yours, students of the work that we do. Because I believe there's no better business to start if you're looking for creating a lifestyle for yourself, generating the highest profit margin possible than to sell education and expertise. Now, what that means is selling everything from digital courses to doing virtual events to potentially doing a mastermind or coaching or consulting or maybe even having a membership. It's sort of everything in that realm, and that's what I've built my entire career on, is doing that and doing that in a bunch of different markets. Now, when COVID hit in 2020, it opened the door to so much opportunity. I'm almost humbled and embarrassed to say it, but last year, 2020, we had our single biggest, most successful year in business in history. And this is at a time where many businesses were struggling and running into trouble. And the reason for it is because we have what I call the digital squared model. Digital squared means this: we generate all of our customers digitally, so we don't rely on foot traffic walking into our restaurant or foot traffic walking into our retail store. We generate 100% of our customers digitally, and we generate 100% of our products. We sell 100% of our products digitally as well. So it's this digital squared paradigm where you can basically build a million or multi-million dollar business, in our case, literally working from home, where you could be anywhere in the world. You could be in the mountains, you could be at the beach, you could be where you and I are both in, outside of Austin, Texas. You could be anywhere in the world and have a million or multi-million dollar business that is very high margin. Now, when you do that, it opens up the door for you to have the funds available to then invest them in the way that you teach, which is why I think what you and I teach is so complementary, where you've got this business that produces a bunch of active cash flow. Well, you can take that cash flow and invest it in assets that will generate passive cash flow. So now you're taking all this extra income from your business, you're putting it in the right investments, where eventually you reach this point, which is what you've helped me achieve, where the active business that you're running now becomes purely a labor of love and something that you want to pursue. You're not dependent, you don't need to work in order to pay your bills and cover your lifestyle. You can literally rely on the passive income from your investments through what it is that you teach. So I think that's why so much of what you teach and what we teach is very complementary and works almost hand in hand.
Yeah, I couldn't agree more. And I think for most people, what ends up happening is you've got someone that maybe is an employee and they get tired of being an employee. And by the way, being an employee is neither good nor bad. It's a right fit for some and it's a wrong fit for others, right? And so you have an employee that says, okay, I don't want to do that anymore. I actually want to have some autonomy and more freedom, and I'm going to start my own business. And before they know it, their business has scaled, but now that business is relying on them. And it can't scale without them, especially in the beginning. And so it ties them up. And then all of a sudden, they become a slave to that business where it is handicapping their time. And so at a certain period of time, you have to ask yourself, am I just keep going through life this way where my time is what I'm going to trade for money? Or am I going to do like what Ryan's talking about, what I talk about in my book, The Lifestyle Investor, where you invest in assets that produce income, that produce cash flow. So then you're taking time that you're trading for money, and then you're giving a portion of that away to assets that are going to produce money. So eventually there's a tipping point where the asset income exceeds the earned income. So you can stop trading time for money and really live life on your terms. And then you can work in your business in any way, shape, form, capacity you want to. It's all on your terms because you're not relying on that income or that paycheck. You have the money to be able to hire people to pull yourself out or to hire the team that can teach you how to systematize your business to remove yourself. There's just so much power that comes in that freedom of time, which gives you freedom of choice, gives you quality of life, quality of relationships.
Yeah, no, I couldn't agree with you more. And Justin, I don't know if we lost you for a minute. I think the audio kind of did that kind of garbly robot thing it did on a test that we did beforehand. But I couldn't agree with you more. It's like making that transition. This is what I wrote in the foreword to the book. I said, it's making this shift. It's first, you work a job, right? Like I think my story, I think is very, I think, relatable to a lot of people who are in your world or aspire to get to where you've gotten. After college, I worked a job. My first job out of college paid $42,000 a year. My wife was in grad school, and I was helping to pay her way through grad school. She wasn't earning anything at that point, and we were just living on that salary, the two of us. She finished grad school, and then we moved to China. I started making a little bit more money, eventually grew to a six-figure salary. And I wrote about this in my first book, Ask. I said, I saw my path. I saw what my boss, who was 30 years older than me, I was in my mid-20s at this point. I saw my boss, he was more than 30 years older than me. And I said, if I continue on the path that I'm on right now, that's who I'm going to become. Like, that's the career, that's the promotional path that I'll get to, is I'll eventually get there someday in the future. And I said, I don't want that path. I want to take control of my own life. I want to take control of my own financial destiny. So I decided to quit my job, which was paying a six-figure job, and I decided to start my business. And those early days are tough. Everyone in my family doubted me. Everyone said, you're an idiot. Like, why would you give up this very promising, lucrative career? But it wasn't the end stage. It was sort of this mid-step. And to your point, yes, it did provide a lot of financial freedom. It did provide an unlimited income. I was making a lot more money doing that, but I was still working a lot. I was still working a lot of hours. And my wife, who helped co-found the business with me, she was working in the business. So it was both of us. So we're both working a lot of hours. And there were years where we wouldn't take any vacation at all. There's no vacation time. We couldn't step away. And it reached a breaking point when my first son was born, who's now about to turn 9 years old. So it was about almost 9 years ago, where my first son was born and I got really sick. So sick I started losing a bunch of weight. I weigh about 185 pounds now. I lost about 50 pounds. I was in about 130 pounds. And I applied for life insurance, and the life insurance application came back denied. And it came back denied because my lab results were off the charts. And I was like, what is this? I thought it was a mistake. I thought my lab results got mixed up with somebody else's. So my wife said, well, let's go to the doctors and see what's going on. So we went to the doctors, had some blood work done, and the doctor came out and he grabbed me by the shoulders and he said, Mr. Levesque, we just got your labs back. We need to rush you to the emergency room now. And they rushed me to the emergency room. And it turns out I'd slipped into the state of DKA, diabetic ketoacidosis. And at 30 years old, I was an undiagnosed type 1 diabetic, juvenile diabetic, and my organs were shutting down. And I was literally days away from slipping into a coma and possibly even dying. So that was kind of my moment where I realized, all right, something's got to change. Like, I've got to make a change. And it set me on this path which eventually has led me to you and to your work, which was to get out of this paradigm of working these 60, 70, 80, 100-hour weeks to build this business and be able to go from working for money to making money work for me. And that's one of the big things that I've learned from you, is how to actually do that. Not to just put money aside and grow for a capital appreciation that'll someday maybe give you this big pot of money that you can then retire on and draw down on. No, instead of that someday maybe, like, you can do things right here, right now, today, faster than you might realize, that will generate surprisingly large amounts of cash flow to fund your lifestyle. And I share this in the foreword of my book, and this is not news to you, but my wife and I, we had this 5-year goal that we recently set. We said, we want to be able to make this amount of money from passive investment income, not our main businesses, just passive investment income. In 5 years, we want to get to this point. Within 6 months of working with you, we already achieved over half of that number. And I predict within the next year, if not sooner, it actually might be less than that, we're actually going to hit 100% of that goal. And it's simultaneously super exciting because it's like, holy smokes. But at the same time, it's also kind of scary because it's like, all right, now what? Now that we've hit that number, like, it opens up a whole world of possibilities. Are we going to take a year off and travel? Are we going to, scale down our time? Am I going to hire more people in my company so I'm not working quite the number of hours that I'm working right now? Maybe hire someone so my wife isn't working quite the same number of hours. It's like so much opportunity that this opens up. And, it's not too long ago that I was literally making $42,000 a year working in a job. And it can happen fast. Like, you can make this progression pretty quickly when you're armed with the right support and knowledge, which you offer in this book and through everything that you teach.
Well, thanks for sharing that story and for your vulnerability. I hope you can hear me a little bit better. But man, I'm blown away at like that journey that you went on and some of the eye-opening experiences that you had with life and death, and then having life of a new child. And, you've got a couple kids now. And so it's so cool to see what you're building and this whole idea of lifestyle investing and the impact that it's had on you and your family, basically the life and quality time that it buys for your family, the people that are the greatest beneficiaries of, you buying your time back. I think that's so cool, because with a business, there's pros and cons. There's like a love-hate, or you could look at it as a blessing and a curse. It's a blessing to have a business. It's a blessing to be able to pour more hours in and actually be able to make more money in proportion, oftentimes, to the amount of hours that you're working. And once you can learn leverage, and scale, you can do it disproportionately, right? But there's still that trap that you got to be careful of. The curse is, if you're not careful, you're going to become a workaholic. You're going to become a slave to your business. You're going to be tied to the income, the lifestyle, the comfort, the security of all the things that and have become accustomed to. And so I love, seeing what you're building for yourself. And I'd love to know even more about, how lifestyle investing has impacted you and the way that you see it continuing to impact you in 2021 and beyond.
Yeah, I mean, I think there's a huge thing that happens psychologically, right? So it's one thing to have a bunch of money that you've saved away, that you're putting, that you've allocated to retirement or to your kids' college education, or helping your kids buy a first home, or, it's one thing to have that big pile of money squirreled away that you've invested in the stock market or invested in, whatever assets, real estate that you've invested in, that you're thinking, I'm not going to touch that. It feels like it's distant, it's far away, that someday in the distant future, I'll begin accessing that amount of money. There's something that happens psychologically when you shift from that paradigm, that mindset, to cash flow, lifestyle-focused investing, where every month on the first of the month, on autopilot, you have $5, $10, $15, $20, $25,000 or more, whatever the number is, landing in your bank account automatically for not doing anything at all other than making the right investments leading up to that point. It's almost like it's this fairy tale. You almost have to kind of rub your eyes, because when that happens and that money comes in and you're more than covering your living expenses, you're more than covering your mortgage and your car payments and any other bills that you might have in your life, and you have all this surplus, it starts to open up things where you say, you know what? Well, yeah, I could grow the business by X percent, but I'd have to work this hard to do that. So maybe I don't need to. Like, instead of growing it, I'm just going to make up arbitrary numbers. They're not real numbers. But instead of growing at 20%, maybe I'm fine growing at 5%. What does that open up? Well, it opens up all this opportunity where we can take a month off, or we can take a week off every couple months and do a trip. Before COVID happened, we had this big trip planned to Europe that we had planned because of this, and COVID hit and couldn't do it. It's still in the plans. It's just a matter of when we're going to do it. And the kids are so excited about it, And the thing that hit me one day when you and I were talking about kids and fatherhood and being dads and family men, was that and we need this constant reminder for anyone who's watching or listening to this right now. If you've got kids, they're not going to be this age forever. Like the age that they're at right now. And I've got two boys, 6 and soon to be 9 years old. And I just try to remind myself of there's going to be this moment where my kids are at the age where they don't want to hang out with dad anymore. Now is the time where they want to do everything with dad, to the point that sometimes it's tough, because it's like I've got work and business and things like that I got to handle. But there's going to be a moment where it's the opposite's going to happen, where I'm going to go to one of my kids, I'm going to say, hey, you guys want to hang out? And they're going to say, no. And I can feel that moment feels so close to where I am right now. And so I don't want to squander any minute, any second that I have. Instead of pushing things off till later, I want to take advantage of this now and this time that we have that's now. And it's true no matter where you are in life, whatever age your kids are, whatever age you are right now, the health that you have right now is not guaranteed to be health that you have, you know, a year from now, 6 months from now, 6 years from now, whatever. And I'm reminded of that every day. I have my insulin pump and continuous glucose monitor that reminds me that if I don't have this thing on, I'm not going to live more than a couple days before I slip back into DKA and I get rushed to the hospital. So when you have that, when you have to come to terms with your own mortality like that, I think it gives you this presence of living life to the fullest, living every day like it's your last, and taking advantage of what's right here in front of you. And it's fine to say that philosophically, but when you have the tools that you teach, it actually makes it a reality. It's not a pipe dream. You can literally say, you know what? I want to set myself and my family on this path that we could take a year off, that we could scale down our hours. I could work part-time, spend more time with my kids, do something that I love, whatever that is, whether it's travel or cook or play golf or do whatever it is that you absolutely love, and not put it off into the future, but do it right here, right now, today. And we're living proof. You know, we're living proof that what you teach works, and just follow the system, follow what you teach, and you'll get the results.
Yeah, there's no doubt. And you put it into words so well, and your life experiences sum it up so well. And, you know, speaking with one of the other members of the Lifestyle Investor Mastermind that you're also a part of, Ryan, and, you know, it's just so obvious and prevalent that society has a certain value system. And if you're not careful, you might adopt the values of culture, you know, whatever's common culture and pop culture, versus what values you kind of decide as a family are your values, or you decide for yourself. And, you know, and I think if you're not real clear on what that looks like, especially from the framework and standpoint of time being your greatest resource, the resource that is, you know, it can be lost at any moment. That right there, that's the game changer. Like, to experience when you go from needing earned income, you know, trading time for money, having a job, when you actually turn the corner and you have more income coming in than what it costs you to live. And at first it starts with just getting to your bare minimum basic, you know, expenses. So it's not lifestyle at first. At first it's just like, what does it cost you to live? What's your, you know, your rent or your mortgage, your utilities, your food, you know, nothing fancy, not lifestyle, you know. And once you get that, that's first and foremost an unbelievable feeling. But when you can take it to that next step and you actually cover your lifestyle, it is one of the most liberating feelings that you're ever going to experience. And I see it happening all the time with people I coach and with people in the mastermind. And people have numbers. They have their target. Like, I need to get to this. Someone just posted in the group, like, here's my number. You know, Jason was like, I need to get to this. And Andy was like, I need to get to this. And so it's so cool seeing that people are tracking it and they know how far they are from it. And they're not going through life in a reactionary mode. They're going through life proactive, designing their life. So not a life by default, but a life by design. And it is so empowering. And for me, on my end, you know, it's funny, like, I worked so hard to have financial independence and financial freedom, and it felt so good to achieve it. But then the next day, that's done. You know, it's like, I experienced that. That's cool. Okay, what's next, right? But to have a culture, a community of constantly seeing people achieve this, pursuing it and achieving it, it's literally one of the most rewarding things in the world. And to hear you talk about your experience and, you know, just the growth that you've had in passive income and the time that that's been able to afford you, it just warms my heart so much. And I feel so privileged to be on this journey with you, Ryan.
You know, and what's cool about this is for anybody who does, in a situation, you have family, you do have kids, is this hasn't been a solo journey for me. Like, for example, it's been first and foremost a journey for me and my wife together. but also for our kids. Like, they hear the conversations that we're having, and they're already learning the concepts that you're teaching. They're learning it from the perspective of a 6 and 9-year-old kid, but it's already in my mind, teaching them these habits, teaching them these frameworks, teaching them this sort of way of living. And they're going to be the stewards. They're going to be the next generation in my family of moving our core values as a family forward. And a big part of that is, I think about it every single day, how they're going to progress in their life, so that they're armed with these same skills themselves. So that, I, growing up like yourself, Justin, we both grew up in pretty modest circumstances. First in my family, go to college. I didn't have the luxury of being able to pursue something in the absence of making money. Like, when I graduated from college, Tylene and I, we weren't married yet, but we moved into an apartment together in New York City. She was in grad school. I was working on Wall Street. We packed what we could fit in the back of a car. We moved it into a studio apartment. We had a mattress on the floor, concrete blocks holding up a door, which was our desk and table in that apartment. That's all we owned. I had like $500 in my bank account. That was it. Like, there was no like nest egg. There was no nothing. So I had to hustle. I had to make money. And so I wasn't able to pursue some of the things that I absolutely, wanted to pursue. I wasn't able to, pursue art or pursue music or pursue things that I didn't have to worry about making money. And so for our future generations, for anybody who has kids, what's cool about this is you learn these skills yourself. You can pass it on to your children, and then they have so much opportunity. They can pursue a career in finance or business or technology or any of the high-paying professions. But if they choose to be an artist, if they choose to travel the world, if they choose to be a mountain adventure guide, making nothing, working for the national parks because they are really tied to the environment and nature, they can do that because they've earned and they've been armed with these skills to be able to generate passive income for themselves. So like, that to me is so empowering. And for me, being in this place right now, I'm at a season in my life where I'm able to start re-pursuing some of those interests that I had to kind of put on the shelf for many, many years, because they're not things that earn income. They're things that it's living. It's not earning a living. It's just literally being able to live and enjoy life with the people that matter to you most. So yeah, it's very exciting. I'm very grateful that you chose, because you didn't have to teach what you're teaching, man. I mean, you generated you set yourself up in a great way. You did not have to share this knowledge with the world. You're not one of these people who is teaching people how to become wealthy and then generating your wealth from that teaching. You've done it yourself as a practitioner, and then you're now giving back and sharing with the world. And of course, you're benefiting from it. I know it's more opportunity for you to make a more impact and more opportunity for you to invest with what you've earned. But I think that makes your story so unique, so genuine, and why I think it's so special for anyone watching or listening to this right now. That's why I said in our Tiger meeting the other day, I said I'm a disciple of Justin Donald because I've learned so much from you.
Well, I appreciate it. That's really kind. I had a friend recently say, "Why are you giving away all your secrets? Everyone's going to know what you do." And I said, "Well, I think it's good for people to know what I do. And if there are people out there that will implement it all, they're going to get unbelievable results. But let's say people just implement one thing. I really believe that they're better off. And most people think there's only one way to invest. And I just want to teach people that there are multiple ways to invest. It doesn't mean the way that someone is investing now is wrong. It just means there's another way that they can do it. There's plenty of different ways to achieve financial success. And I believe the fastest path is what I do, what I teach, which is buying assets and creating cash flow. And one of the things you said that I want to double down on, Ryan, that I think is so profound, is just the education here with your kids and the legacy that you can leave. But if you're not careful, then that legacy can be squandered. So if you look at the Rockefellers, for example, they were so good at teaching basically the wisdom, the strategies, the philosophies, the underlying mechanics. And so that family, generation after generation after generation, has done very well financially. you've got the Carnegies that were, we're talking about two of the wealthiest families, probably the two wealthiest families in history. And the Carnegies basically squandered all their wealth. And so today that family doesn't have what they had. They don't really have much to show in terms of tangible assets. And I believe that's because money was handed down and not the education around money. And so I think it's important to not just equip our family, our dependents with money. And in many cases, it's better to equip them with little to no money, but give them all the financial knowledge and know-how for them to learn how to create it themselves, because I want them to have grit and I want them to be able to grind and to not have a cushy life. Because I want them to know what it feels like to get out of their comfort zone and have to work hard for something. But I want to give them the leg up of education. I want to teach them what they need to know so they understand how money really works and what buying assets looks like. And in a time and a place today like the U.S. is in, where we're printing money like it's going out of style. I read something recently that 40% of the dollars in the U.S. were just created this year. 40%. So almost half of our money is created this year. It's crazy. So if you're just saving, you're losing. And if you're not keeping up with inflation, you're losing. And trust me, inflation is much higher than what the experts say it is. It is much higher than 3%. I can assure you of that. And so, if you're not making, more than 5%, you're probably losing. And most people are not. And a lot of investments, they're just not doing that. So you got to be really careful. And I like buying assets because when you are trying to hedge against the devaluation of the dollar, as money expands, let's call it the supply of money expands, it grows, more money is printed and put into the system, your assets grow in relationship to that. So you are basically kind of capitalizing on the inflation that happens on your money. I mean, basically, inflation is because more money is printed. I was talking to someone the other day and they're like, well, we just inflate each year and we just go up. And I said, no, we inflate because we print more money. There's more money in the system. It makes money worth less. So it costs more to buy things. That's inflation. And this was never able to happen when we were on the gold standard and money was backed by gold. Now it's not backed by gold. Now it's a fiat currency, which just means that it's not backed by anything. It's paper money and the government can print as much as they want. And they're going to continue to print. And there will be a reckoning at some point in time. But as money is devalued, as the supply, of money expands, so do assets. So it's smart to be in assets that produce cash flow that will expand with the supply of money that you can improve so that they expand and appreciate. And then you're getting cash flow being kicked off at the same time. So you're getting the long-term appreciation on the asset. You're getting the short-term appreciation on the cash flow, and you're getting immediate use of that cash flow.
Totally. Yeah. I mean, amen. I mean, you don't have to, you're preaching to the converted over here. I know you're speaking to everyone listening to this and watching this right now, but it's why I'm so simpatico with this entire philosophy, because again, it's not predicated on squirreling away money saving. It's not predicated on taking these big, risky bets on startups and, venture capital backed early stage companies that are either going to go to $1 billion or nothing, which is just not who I am. I like the idea of small calculated bets that with reasonable certainty, you're going to get a return on your investment immediately, and you're going to make a multiple on your investment, or a chance to make a multiple on your investment, almost as this added bonus. So worst case scenario, you're getting the cash flow and your principal back. Best case scenario, you're getting your cash flow, your principal back, plus some type of upside pop on the back end. And if that plays out enough times, it can be incredibly lucrative. But even if it doesn't play out, you're still in a great place. You're not investing in a basket of startup companies where you're saying, all right, if I invest in 50 of these companies and one of them turns out to be great, I'm going to be okay. Cross my fingers and let's hope. Like, that's just not the way that I'm hardwired. I just can't buy into that. And at the same time, you have more control over investing in something like the public capital markets, i.e. the stock market, which is totally untethered from economic reality, which we all know. You look at economic GDP growth, and you look at the growth of the stock market over the same period, and you see economic GDP growth has been a marginal increase, and then the stock market growth is just, through the roof. It's just untethered to reality. So, and small investors like us that are just buying incredibly tiny minority shares of these public companies, we can't make an impact on the operations of that business. We're just too small. So where do we play? Regular people like you and me, where do we play? And I think it's in this space. I think this is the opportunity right now. I also think there's a window of opportunity because there was a time, a generation ago, where investing in the stock market it's in public capital markets, was in the domain of experts. And then the democratization of information made it available to people like our parents' generation, where they could buy individual stocks for the first time without being an expert or working on Wall Street. Well, now that opportunity is sort of behind us. This is the new opportunity right here. And it remains to be seen how long this window of opportunity is going to be available before this gets kind of eroded and we got to go into the next thing. But I think the key is you have these rules, these commandments, I think you call them, that represent timeless principles that the investing world will change. Crypto is the thing today. Crypto might not be the thing tomorrow. Cannabis is a big industry right now with a lot of opportunity today. It may not be the opportunity tomorrow. These things come and go. But the principles that you teach are timeless. And I think that's what empowers you to succeed and have the confidence in both yourself and the decisions you make as an investor to succeed not just in the short term, but for the rest of your life. And that's the thing that I feel so secure in, is that even if these kind of immediate opportunities in front of us go away, I now know from what I've learned from you, I now know how to look at deals, how to structure deals, how to find opportunities, how to source these deals, and find ones that are winners where I've minimized my risk and maximized my upside, creating this risk-reward imbalance that, again, you cannot do by just investing in the stock market. You need to do it with some creative thinking and some of what you teach.
Yeah, I mean, you couldn't have said it any better, Ryan. And I love hearing it because you actually have really good experience in the financial markets because you used to work at Goldman Sachs. And so you have an education, you know what happens on Wall Street, you know what the stock market play is and the volatility. And you know what it looks like if you retire at a time where the stock market tanks and you don't have time for that money to recover. You got to be careful, but there are a lot of high feed products that are out there. And I mean, the list goes on and on. And by the way, I believe there's a time and a place for all different types of investing. To me, I believe you want to get your cash flow from assets that can appreciate. You want that first so you can cover your expenses. And then from there, when you have additional surplus cash flow, you can invest that into some of the things that are maybe more risky or are maybe, riskier at least than, buying an income producing asset that has some intrinsic value. It's not going to go to zero. You buy real estate, rental, it's not going to $0. You can buy a stock that goes to $0. We've seen it happen before. And I think it's also really important to recognize the difference between an average rate of return and an actual rate of return, because this is a smokescreen that I see happening in the industry and in the financial industry, in the conventional financial industry with stock market. And I think you got to be careful because an average rate of return is not an actual rate of return. It departs from reality. And it's a bit manipulative in my opinion. So,
there's three things, right? It's that average versus actual rate of return. And so, what Justin's talking about, and from my perspective, I know you do a great job of teaching this, is that when you see these illustrations of average rate of return, imagine you average 8% per year for the next 30 years, while compound interest, the eighth great wonder of the world, is going to mean your $10,000 today is worth $1 million at some time in the future. But what that assumes is this straight line 8% return year over year. In reality, with the exception of certain financial instruments, you're going to have some years where you make 12%, other years where you make negative 2%. Some years where we make 3%, some years where we make negative 5%. And when the ups and downs happen, even though the average rate of return might average out to 8%, the actual return that you get is not what you would get if you had an 8% return every single year precisely. It's actually oftentimes much lower than that, because those down years are what kill you. Those down years, in order to get back up, you have to do not just an 8% return, you have to do in some cases 100% return just to get you back to where you would have been, which is virtually impossible. So that story's never told. That's the first one. The second one you've touched on, which is inflation. Inflation is the hidden tax that is so underappreciated, and it's a tax that we all pay. It's a tax that we all pay. It's the tax we're paying right now for the 40% money supply injected into the economy in the last year. That's number two. And number three are the real taxes we pay, the actual state and federal taxes. And so when you can create a situation where you eliminate those valleys on your actual rate of return, or your average rate of return, and create an actual rate of return along the lines of what you're expecting to get, when you hedge against inflation by investing in certain asset classes and doing some of the things that you talked about, investing in assets that produce cash flow so that you can grow with inflation. And number three, do it in a tax-advantaged way, which is huge. And that's another key thing that I've learned from you, is not just the run-of-the-mill average stuff that your CPA is going to teach you or that you're going to read about on some of these websites online, but the true strategies, the real strategies that allow you to grow, and in some cases pay little to no tax at all in perpetuity by investing in the right structures in the right way. It takes things from that $10,000 from being $1 million sometime in the future, maybe if all goes well, to being $10 million or $100 million by making the right moves here. It makes all the difference in the world. And it's one of these things that, again, I'm a student of this world. So it's not, I didn't come into your world as a total neophyte, having never learned anything. I paid my way through college by investing in the stock market in the late 1990s during the first tech boom. I took my $5,000 inheritance when my grandparents passed away and parlayed that into almost $100,000, which is what paid my way through school. I got very lucky and started investing right before the tech boom took off, like right around 1990, 1992. And I sold right before I went to college, which was the year 2000, which, as we all know, is when the tech bubble. So I got as lucky as humanly possible. If I had been 2 years on either side of that, that's not the story I'd be telling right now. So I used to love to think that it was due to skill. And yes, I didn't blow $5,000 on Pokemon cards or whatever. But the point is, I was super lucky. What happens if you don't get lucky? And that timing doesn't work out. And so I think there's so much of what you teach that hedges against all of that. And you're a master of this domain. And for anybody who's, and I just want to share a little bit about my experience, because I know some people are listening or watching this right now and saying, is this baby stuff? Is this is this the stuff for what's a 401k? No. You'll cover all that stuff in what you teach, but you take it 7 levels deeper. And the reason why you're able to do that is, number one, you're probably one of the most well-read people that I know. It's why I love hanging around with you, is because you'll dive into a subject and you won't read a book summary on cryptocurrency. You'll read 27 books cover to cover on cryptocurrency and talk to 100 people in that industry to master that thing. And it's not just in the investment world, it's in, you and I have had conversations about health and fatherhood and all sorts, exercise, all sorts of different things. Just the way that you're hardwired. So that's why I think, by proxy, being in your world, anybody who's thinking about being in your world, being part of your masterminds, getting private coaching from you, certainly buying your book, which is a no-brainer. I mean, that's like a obvious thing. You're getting, it's like when you tap a tree for maple syrup. It's all the sap needs to be boiled down until you get just to that final little bit of goodness at the end. And that's what you give us, is you do all the boiling down for us, wade through all the garbage that's out there and give us the best of the best deals, investment strategies, structures, philosophies, tax advantage ways of doing things. You give us the best of the best of the best. You do a lot of the heavy lifting for us. And I think that's what's so compelling about what you do and teach. So that's my commercial for Justin Donald and why I'm such a huge fan.
Well, thank you. That's so kind of you. I really appreciate that, and I appreciate your perspective. And for me, I've been investing the majority of my life now. So I've been investing for 22 years in some way, shape, or form. And so I've done it well and I've done it poorly. I've made mistakes, and so I've learned from those mistakes. In fact, in my book, I talk about a huge mistake that I made. It's one of the first stories that I share. Actually, I think it might be the first story that I share. And I think that is important because that's kind of training ground for where I learn some of my philosophies and commandments that are in place today. I can't. I just can't echo enough that it makes sense to get around people that have the experience and the expertise, which I have done myself. I like getting around people smarter than I am, and surrounding myself with experts because that's huge. I remember back in college, I was selected, 20 of us out of the business school at the University of Illinois. So I can't remember how many were in the business school. The school was 45,000 students at that time, and it was the largest school. Besides liberal arts. And so it was, it was a kind of a competition to get in there. And out of 20 people, I got to manage $1 million of actual money for one of our alumni, and as a class, we made decisions. And so I'm a college student working with $1 million. And so I learned to respect money very much. And by the way, it's great because, it's one thing when it's your money and it's so much like you take such great care of your money, right? It's easy to make decisions and stuff when it's not your money. But when it's an alumni's money and you're being graded on it and you need to return a return, which we did. And by the way, this class was the coolest class. We used to meet every other week at Murphy's Bar and have pitchers of beer while we talked about stocks that we wanted to buy or sell. It's just it was a neat experience. And I'm very thankful for that. But I had exposure at an early age. And so I learned some things. I learned things that I liked and things that I didn't like, but I also was exposed to a lot of risk and I saw what happened. And so a lot of that part of my life has created or paved a way for me to do things the way that I'm doing them today. And so, there are a lot of investments that I like. I really, you've heard me talk about real estate. I love buying companies. I love buying equity in companies where I can earn a component of the cash flow, of the revenue, of the profit. I think that there are some really unique strategies there. I love debt deals where you can get a really high return, but you can collateralize your loan or protect your money based on other assets that the investment is backed up by, right? That are worth more than the investment itself. So if someone defaults, you actually do better, which is an important lesson I learned. If you're going to do, anything in the world of lending, the best option should be to get the good return that you're contractually guaranteed. That should be the second best option. The first best option should be if it doesn't work out. And no one hopes for that. But I put that in my book. Like there's great leverage in something succeeding if the best option is that it doesn't succeed, or the best payout is that it doesn't succeed. And then there's true alignment on the business going the way it needs to go and the funds being used the way that they are intended to be used. So, so I really thank you for, sharing that and for your time here today. I know that you're incredibly busy. So for you to spend an hour of your day, here with me and all those who are listening in and watching us, I really appreciate it. And I appreciate the, just the time that we've had over this past couple of years. It's been really fun.
Absolutely. Yeah. And I think it's just the beginning. Like we were saying before we hopped on, I think there's so much more opportunity. I think with 2021 in front of us right now, there are going to be some shifts in the global economy. And anytime that there's a massive shift, as there was in a lot of different places in 2020, this past year, it represents opportunity. And the question is, are you well positioned to take advantage of these opportunities? Or are you going to be impacted by these changes and not have that opportunity? And I think being in your world is, for anyone who's thinking about going deeper with you, whatever that looks like, I think is the best way to be best positioned for these shifts and changes that are going to be happening in this next year.
Well, thank you so much, Ryan. I'm excited for this episode here today. You crushed it, obviously, and I appreciate all the information that everyone could glean. I mean, I'm sitting here continuously gleaning from you, so I appreciate that. And we've got an awesome series lined up for the rest of the week. Brad Weimer on tomorrow, the founder of Easy Pay Direct. We've got several others coming up in the days to come, and then our launch party next week on Tuesday. And so that will be from 10 a.m. to 1 p.m. Ryan's going to join us again for that. So I'm excited to have him, and I'm excited for everyone that was able to spend some time hanging with us today. So thanks, and we'll talk soon.
Awesome.